tell us a little bit about today's numbers, first of all.
Yeah, look, I would point out in today's numbers, there are a number of highlights, and the highlights for me stem around, despite some declining prices, we still made $1 billion worth of free cash flow. We ended the year with a strong balance sheet of $504 million worth of net cash. We announced an increase in our capital management program, expanded it by $250 million US to $1.25 billion US. And we continue to actually return $762 million US back to shareholders in 2019. So despite some of the price volatility we're seeing, we continue to perform as a business and have a positive outlook.
Graham, absolutely. So tell me, what is the outlook then? What do you actually need to do perhaps to lift things? Or is this something which is wholly at the whims of what's going on with commodities prices, essentially?
Well, I think if you looked at it at a very high level, you looked at our earnings the prior year, underlying EBIT was about $1.8 billion. This year's it's about $1.45 billion. The biggest change is in commodity prices, where we saw movements of around $333 million. So that's a big impact that's obviously flows, and that's something obviously not always within our control. What we continue to focus on is the things that we can control, which is improving our safety, our production and our cost performance. And they're all things I think the team did a very good job on this year. I think at the same time, we continue to build options into the portfolio for the future in terms of 2 acquisitions this year to give us growth potential and potentially a third election of a joint venture option in Alaska in January next year, which would give us another growth option.
Yeah, absolutely. What I'm trying to get at here, trade tensions have certainly impacted commodity prices on the whole. What's been the impact on your business? And that's one part of my question. The second part is really, with this uncertainty as to what happens next, are you delaying investment decisions at all?
Look, I would say I would start to medium long term. We have a positive outlook on the commodity space. We still believe in the China story, slowing growth rates off a higher base. We still see India continue to develop strongly. I guess the other flip side, if you think about it, is on the supply side. I think it's an area where the industry is underinvested for the last 5 to 10 years. So there is no real supply coming into the marketplace. And I think that'll put a lot of healthy tension into the supply-demand balance, medium to long term for many of our commodities. In the short term, what we're seeing is volatility. We've certainly been impacted by some of the volatility. If you look at this year's prices, for example, aluminium had a real drop-off in price. It cost us about $200 million. We produced 9 commodities, of which 8 of those commodities had a more negative impact than the prior year because some of the discussions around uncertainty in trade wars.
Graham, you're offloading your South African coal assets. To what extent will that help to strengthen your balance sheet?
Oh, look, we've been on a journey around South Africa Energy Coal for a couple of years now with the objective of always, transforming a sustainable business into black ownership hands consistent with the South African government's agenda. There is no doubt when we complete this transaction that we will have a stronger balance sheet because all the assets and liabilities to go with it. We'll have higher returns and we'll have a more robust balance sheet. So the strategic objectives of doing that transaction remain on foot. What we have signed is an exclusivity agreement, now working towards a sales and purchase agreement on that business. And we expect it to complete by the end of our financial year, which is June next year.
Any plans to offload other assets, perhaps like your manganese alloy smelters in Australia, in South Africa? Any plans to do that?
Yeah, we're certainly carrying out a review on our manganese alloy business. So we have an ore and an alloy business. The ore we think has very attractive supply-demand fundamentals. We have the best asset in the industry in terms of GEMCO in the Northern Territory. The alloyed side of the business is a bit more challenging because of the 2 terminal end markets. India and China have a lot of self-sufficiency, and also the new smelters of the common line in Malaysia have subsidised power and new technology, so very hard to compete in that space. So we're doing a review of both smelters. That review is still underway, and we'll look at all the options ranging from permanent closure to suspension for a period of time to potentially divestment. But we haven't made a final decision on that yet.
Graham, out of all the commodities you have out there, which is the one that you are most positive on?
Look, I would say the two medium to long term we're most positive on would be alumina and also manganese. What we're trying to add to the portfolio is more base metals. So in that space, medium to longer term, we see more attractive fundamentals for nickel and copper.
And also, you know, you guys have been pretty active in the M&A space in the last few years. You know, there comes a time when you have to consolidate and rely on the organic growth that you get from these businesses. Are you at that point now?
Look, I think if you look at our acquisitions, so you're talking about Eagle Downs, 50% interest in the metallurgical coal mine, and Hermosa, which was the Arizona mining acquisition, they are both projects that have many decades worth of potential, but they are development projects. So I think your comment around, you know, focusing on bringing those development opportunities into operation, that is a clear focus for us going forward.
Graham, you touched on nickel. Nickel prices have rallied on expectations that perhaps Indonesia will impose a total ban. Are you expecting that ban to be pushed through? And where do you see nickel prices going from here?
Look, I think there's been two upward pressures, if you like, on nickel. One is obviously driven by the demand in terms of using a battery technology, and I think that's real, and that'll continue, but that tends to be the high-quality battery, high-quality nickel. On the more pig iron or laterite nickel, we continue to see Indonesia being a big exporter to China. As you're aware, they have suspended production before, then they've brought it back in line. Any short-term suspension that happens will obviously have a positive impact on the nickel price. I guess the question is, how long will that be around for?
If that ban does materialize, what impact would it have on your business?
We produce nickel in Colombia at Cerro Matoso, and obviously any ban on that nickel that gets produced out of Indonesia going into China will have a positive impact because it'll take a fair bit of supply out the market and obviously build a healthy supply-demand deficit.